there, folks. Welcome into today's video. Got an interesting one for you guys here. S&P will be at 4,400 by year end. That would be a pretty big move. We're going to listen to what this gentleman has to say. I'm going to react to that and give my personal opinion on that. Then we're going to react to this video here. It's a 2-for-1 here tonight. Apple can go to $250 over the next couple of years. Gene Munster says this, so we're going to react to that, give my perspective on that as well. I hope you guys enjoy this video. Now, two perspectives I want to share with you before we get into this video. And by the way, thanks everybody for that subscribe to this channel already. Over 8,000 subscribers. Absolutely crazy, okay? A couple of perspectives I want to share with you guys. First one is, I hope that gentleman's wrong about the S&P 500. I hope we go lower and we finish the year at 3,700, 3,800, something like that. I've been cashing up the last couple months as, the market kind of just went up and up and up. I definitely use that as kind of a time to cash up a bit. So I kind of hope that the market goes lower over the next few months, so I'm able to buy more shares for cheaper. Let's just put it that way. My personal perspective always on the market is I'm not looking at it from a perspective of like, I'm buying these stocks because I think they're going to go up over the next 4 months, right? Wall Street kind of looks at these sorts of things and pays more attention to them. And I think they're interesting because as long-term investors, we're always trying to figure out, should we deploy more heavy in stocks? Should we pull back a bit? Should we cash up a little bit, right? And we're trying to always view it from the kind of that perspective. Short-term traders are a little more focused on deploying because they think the market's going to go up or down in the short term, essentially, okay? But my kind of perspective on it is, always focus on the long term with these things. Remember, you're buying a company for the next 4 years, not the next 4 months. And, we can listen to these things. We can see what's going on here and share our opinions, but, don't get too caught up into the short term. At the end of the day, remember what's going on long term for your companies. Think about where your company's at 4 years from now. Where's that company's revenues 4 years from now? Where's its net income 4 years from now? What are you paying for it now? What should it be worth in the future based upon where the net income's going and based upon what type of P/E ratio that company's worth? Always keep those things in the back of your mind, guys. I think that's very, very important. Also, before we get into this video, I want to share something with you guys. Massive Labor Day sale coming in for my Becoming Master of Stock Market course. I was going over this the other night and I was just like, this is so much value in this course. Like, it's ridiculous. So if you want that deal shot to you when it comes out on Labor Day, sign up with the pinned comment down there and we'll send you over that deal for the flash sale, which we haven't done a flash sale on this course in a long time. But like, some of these videos are just like classics, man. How to outperform the market, how I value a growth stock, how I value a growth stock part 2, how I find the next high growth stock. Like, some of these videos are just, valuation studies, how I modeled revenue and net income. It's a 20-minute video. I never talk about those sorts of things on YouTube. Like, these are, just classic videos. So, yeah, anyways, if you're looking to get that course, a 24-minute video just on Moat that video covers, like, insane. This video I just added recently, which is on comps and how important these are and what this means for stock prices. And it's a very complicated subject, but I try to break it down as easy as possible, essentially. So, by the way, if you ever bought this course in the past and you ever lost access to it, as long as you have proof you bought it, hit me up on Instagram or something like that. If you ever have trouble like logging in or something like that, and I'd be happy to get you in there. But you do have to show proof. Don't just be like, bro, I bought that course like 2 years ago and I can't get access to it now. Like, you got to show some sort of proof that you bought it, and we can always get you in there and whatnot. But yeah, I'm always adding videos to that. So, it's a course that I've just evolved over time. And like this video I just added like literally a couple nights ago. So it's, you get lifetime access to this. It's absolutely amazing. So definitely check that out. Pin comment down there. Alrighty, guys, let's get into this and let me give my perspectives.
We want the bullish Wall Street reaction, but he knows that policy works with a lag of about 6 months. So whatever they do in September is going to show up in first quarter, March of 2023. They're aware of that. And as a consequence, I think by then you'll have much lower inflation, and I think that the Fed will...
I do agree with that. Just one factor is comps alone. Comps alone is something the market has to deal with. The other thing is energy prices have soared. If you're talking about a potential slowing in the economy, because inflation has been hurting consumers, oil's going lower, natural gas will be going lower over time. Like, those freakish moves they had are unsustainable.
More in a position to turn more dovish. The market hopefully anticipates that in advance. So I wouldn't overreact to what we saw today. I looked at all the measures before I came in here. Financial conditions are only back to where they were on a 5-year average prior to COVID. PE ratios have gotten more reasonable. So I really don't expect the new low crowd to win out on this one.
I appreciate that. You know, something I always show is like the Yardini forward Ps, and we've been trading insanely cheap for especially small caps and mid caps for months. Anybody that follows me and my channel, you know, I've been showing that for months now, several months, about how low we are trading in terms of forward Ps for small caps and mid caps. It's at unsustainably low numbers. How much longer can it last? I don't know, 3 months, 6 months, 1 month, a year, you know, at some point in time, it has to break. Like, we can't keep trading at those low evaluations for this long. It's unsustainable. So, even large caps, the thing with large caps is they're trading about where you should be trading at, or a little maybe rich. So large caps are not nearly the opportunity that smalls and mids are. And the reason being is a lot of people have flooded money to a lot of the large caps to hide out, and they don't want to hold anything that smalls or mids in a time period of uncertainty, right? And so this has driven the valuations of smalls and mids through the floor to valuations that you just can't even find these stocks at other than maybe 2008, 2009. That's like the time period you got to go back to see, you know, mid caps and smalls trading at this cheap valuations on forward P metrics. And large caps, a lot of people are just hidden out money there, so that's why those haven't dropped as much. Because people got to put money somewhere. And so people have already got a lot, you know, just kind of in cash, right? But inflation's eating your cash all the time. Your cash is becoming less valuable over time, right? And so where are you going to put your money? Silver and gold haven't been doing that great recently. Crypto's a mess. Housing, who wants to buy a home right now, right? Luxury homes are dead right now. They're in a horrible spot across just about the entire United States right now. So where do you put your money? They put it in Apple. They put it in Microsoft. They put it in the big dogs. That's where people put their money. And that's why those valuations are trading on the richer side, or you could say like upper end of fair value.
So nothing significantly changed today? I mean, do you feel like the stock market was just a little off sides with Powell? The bond market in recent days sort of moved more into alignment where perhaps they thought the Fed was going to be, maybe it just took the stock market an extra day to get there?
I think, you know, if you think about the market, it tends to move directionally right, but then gets ahead of itself or overshoots on the downside. I think it may have gotten a little ahead of itself in the very near term, but 6 months from now, and that's when the policy will really take effect, we're going to have dramatically lower inflation. Energy, food, goods, even services, shelter, rent. They've all either rolled over or all of their leading indicators have rolled over. I would worry a lot less about
rents. Have been something in big focus over the last couple months here. I've seen, you know, people doing definitely not just videos about it, but like borderline like documentaries on how much rents have gone up basically this year in 2022, which has been insane, right? Completely unsustainable for many various factors. One, real estate prices are starting to come down across the United States, okay? Now, in a time period where real estate prices are going insane, obviously people can just keep jacking up their rents left and right, right? We got basically a record amount of homes being built right now in the United States, or one of the biggest records we've kind of ever seen, which is all coming online over the next 6 to 12 months, okay? On top of that, the amount of apartment buildings being built right now, look at the data around that. It's through the roof, astronomically high. All these apartment buildings are going to be opening over the next 6 to 12 months. So these landlords have definitely gotten very, very greedy, and the world has been theirs for the past year or so, okay? And, you know, obviously, if you know, a home's up 30% and everybody else's rents are up 30%, what are you going to do as a landlord? Most landlords are like, okay, I'm going to jack up 30% on my tenants because that's what the market's willing to pay. Well, when all this competition comes in, you no longer can do that essentially. And that becomes kind of a far-fetched dream. And it's like everything. If there's a ton of money to be made, everybody wants in, right? The rental market has been very good for quite a while. So what happens, especially when a lot of cheap money's out there, everybody's like, build a ton of homes, as many as you possibly flip and flapjack and can, even if they're on spec, whatever it takes, okay? Build a ton of apartment buildings, build a ton of these communities left and right? Because there's so much money to be made. Well, all of a sudden, all these hit the market in a time period when maybe, let's just call economic activity is slowing. All of a sudden, you got a mayhem, and next thing you know, apartment communities, homeowners, they have to be in a situation where they either can't go up in their rent or they're going to have to start going down, and that's going to start playing out in at the very end of this year and into 2023. And so that's what we're going to see happen there. And if anybody wants to, try to stay greedy and keep raising their rents 10, 20, 30% next year, good luck. Good luck. Yeah, it's a dream. That's a pipe dream is what I call that, okay? When you see this inventory that's about to hit over the next 6 to 12 months, woo-wee! That's all you got to look at, man. Whee!
That. We didn't, as you said before on the show, have that much of a bond market reaction today. So it didn't.
And one factor, I didn't even mention this. This has to be stated. No one even thinks about this, man. When the economy's good, or seen as good, right? People move out. They get their own place because they're doing good for themselves, right? If we're talking about a weakening economy and potentially a weakening job market and consumers being hurt by inflation, what starts to happen? Multiple people start moving in with each other. Family starts moving in with family that weren't living together before, right? People start getting roommates and because they can't afford that 2-bedroom. So they room with somebody else, right? Because it would be cheaper to have a roommate. And so that's what something you see simultaneously if the economy starts to weaken. Meanwhile, you have this glut of inventory of new homes being built and apartment buildings all coming online when potentially people are thinking about, I don't really want to get my own place. I don't want to get my own house, my own apartment. I'd much rather have a roommate because that's what I can afford right now, right? And that's just something that's never even really thought about on a high level. That's extremely, extremely important, right? And so just something to keep in the back of your mind as well when it comes to the whole rent situation as we go closer to 2023.
To believe that valuations will go under a lot of pressure. Earnings are still good. Consumers are still sitting on $2 trillion of extra.
Earnings are still good. I disagree. Earnings are not still good. Earnings are at best okay. That's what I'll say about that. Borderline bad. For a lot of companies, earnings are bad right now. Okay. So I 100% disagree with him about earnings are good right now. Earnings are bad or okay. That's about it. You can't call earnings good right now. You can definitely not call earnings great. No way. No way. I look at 100 plus companies, reports every single quarter. And I can tell you the overwhelming amount of companies have reported okay numbers or bad numbers. Very few companies are reporting good numbers right now. Very few. And I mean very few.
The top 75% of all consumers distribute that cash fairly well. It's not all concentrated. So the situation's really not that bad. Every leading indicator indicates there's no traditional recession until June of 2023.
So I would take issue with this. What if, as you say, 6 months from now, you expect inflation to be a lot lower than it is now? And we obviously all hope you are correct. The problem with that is, okay, great. So it goes from 9% to 5%. That's not 2%. And then they still have a lot more work to do to get it to 2%. Are we taking that fully into account and appreciating that as much as we need to?
Everything I model out says that the core PCE will hit the Fed's 2.7 target in the last SEP by middle of 23, and CPI headline will be...
Okay, so basically he's saying inflation will not be an issue, in his personal opinion, by mid-2023. No longer an issue. We're under 3%. He just said 2.7. So we'll see, but that's his perspective. That's his opinion on that, okay?
Barely above 3, so that's pretty good.
Interesting.
S&P end of this year is what? What's your current target?
I've been doing this a long time, and fighting seasonality is not a very good profession. The market is weaker May to October and very strong November to April. When you go against that 2 out of 3 times, you lose. And that's worked for 72 years straight, if you take an average. So what I'm saying is we will be 4,400 by year end. We could have some of that backloaded in the fourth quarter, but I'm still bullish and I like growth. Weakening inflation and a little better than expected economy, in other words, no recession, that pushes you into software, media, entertainment, technology, hardware, retail, and semiconductors, which is big tech.
Interesting. Okay, so interesting perspective there, okay? So, and we'll get into this Apple video next here. Here we are with a gentleman basically stating what a lot of Wall Street has been kind of saying. They're expecting this good fourth quarter for the stock market, which is just interesting because yet a lot of these folks feel like we're going to have this quote unquote real recession, whatever that is, okay? Because it used to be two quarters of negative GDP and, you had a real recession. Now, they're trying to change definitions and whatever, okay? But it's just interesting that this gentleman is out there saying that he thinks the market's going to go up quite a bit from here, right? That's a pretty big move for the S&P 500 to finish at 4,400 in a really strong fourth quarter, which would be in line with a lot of what Wall Street feels. I'm seeing a lot of people expecting this strong 4Q. And at some point, does it become a self-fulfilling prophecy, right? But does that move happen more in 3Q? That's also something we got to consider. Because here's the thing, if everybody's expecting this good fourth quarter, then what do people start doing? They start buying before you get to the fourth quarter. The reason being is, well, if the move's going to happen in the fourth quarter, guess what? You got to buy in prior to that, so in 3Q. So then it leads you to this thought process. What I start thinking about is start thinking like, are we going to have some kind of banger third quarter here? Because all this Wall Street money is going to be thinking we're going to have this great fourth quarter. They're going to get in the third quarter. Is going to push the market way up throughout the third quarter, right? And then all of a sudden we're being in a situation where maybe after midterms, starting in November, the market starts to sink. And then the great fourth quarter we're supposed to have never really happens because all the money already came in the third quarter essentially, or the very beginning of the fourth quarter. And then we start sinking. So these are just kind of things, that are just interesting in the market, and just hearing these, Wall Streeters' opinions. And at the end of the day, man, a lot of these guys and gals, they control a lot of money, either directly or indirectly, by their words and their opinions. And if they say we're going to have a really strong fourth quarter, S&P's going to 4,400, a lot of folks with a lot of money pay attention to that and make moves based upon that. Not just pay attention to it, but they actually make trades based upon this, right? And like I said, if people going to front run, that's what happens. If I told you this stock's going to have a great, let's just say everybody thought, hey, XYZ stock's going to have an amazing October, right? It's going to just do amazing October. What does everybody with their brain start thinking? Okay, in either August or September, I'm going to start buying XYZ stock because it's, everybody believes it's going to have this great October. I got to get in front of this, right? And then by the time October happens, the stock probably doesn't even go up, right? And so it's just, interesting. That's all I call that, okay? Let's get into this next one.
Says stick with big tech as the bottom approaches. He warns the fourth quarter likely will be ugly, but he's got some ways to play it.
Oh, wait!
Is managing
now Gene Munster says the fourth quarter will be ugly, but he's talking specifically about, it seems like Apple stock here, but it's just interesting.
At Loop. Gene, welcome. Okay, so you got Apple in here, and, Apple and I go way back, as do Apple and you, but Apple has held up so well thus far. How can you recommend it here?
John, it's arguably the world's greatest company, and I think that distinction is a distinction I've never given to a company. And the reason why I still believe that this can go higher, 250 over the next couple of years, is in part because their core products are necessities. 70% of their...
in a couple years. So basically he's talking about over the next 2 years specifically, couple means two, this stock's going to to $250 is basically what he's putting out there, which would be a pretty darn nice move. And that would likely mean the S&P 500 and the Qs made a very nice move over the next 2 years as well. So to make a call like this, you've kind of got to be a little bullish on the markets as well, because Apple's going to push around the market. So if Apple's going up, it's pushing the markets up.
I deem as necessities, not discretionary. 30% is discretionary. I also believe that they have an opportunity to get into new markets. These are things that can essentially really kickstart growth. They have a big problem in Cupertino when it comes to growth. This is a $400 billion company. Tech companies are either growing or you're dying. And I think that one of the key themes within Cupertino is how can they continue to grow that? And so, John, when I think about Apple, I think about a strong core business, and then this pole position within 3 additional markets, whether it's health, whether it's automotive, whether it's AR, any one of those 3, I think can unlock some significant new market potential. And as you said, John,
one of the problems with Apple is their revenues are so large at this point in time. To have anything meaningful to their revenue at this point in time and to their bottom line, it has to be massive, like massive. Another company, when Apple launched the iPod, for instance, it was a huge game changer for them because their revenues were so small at that time. When they launched the iPhone, huge game changer for the company because their revenues were so small at the time, right? Now with a company that's doing 400-ish billion or whatever in revenue, and last year I believe this company did, I think it was $94 billion, a little under $100 billion if I recall, of net income, bottom line. So for them to flip and flapjack and move these numbers, they have to come out with something ridiculous that is at a crazy average selling price and that hundreds of millions of people want to move the numbers now at this point. And that's hard. That's hard.
Company for a long time, and you can recount many times when investors get optimistic about owning shares of Apple when they go into new markets. That essentially unlocks a higher multiple. And so that's
But Gene, in all due respect, it's already trading at a much richer multiple than it's traded at in quite some time over the past year.
Substance. I think that they've got a great core business. And right now we're really not talking about some of those other initiatives. We talk a lot about them with Amazon, but we're not talking a lot about it with Apple. And I think eventually that will come around. And I think that will be part of not only the earnings growth story, but also the multiple growth story.
One of those areas is advertising, or at least making money off of the desire of the ecosystem to target advertising. And I mean, some might say if Apple succeeds there, then Meta, the parent of Facebook, has to fail. But you like Meta too. Why?
Valuation?
Meta, it's also about earnings calls 16 times next year. They have 40% of the global audience, of the internet audience, visits a product daily. That is a powerful impact in terms of how they can ultimately monetize. I think they will navigate around some of these issues. And last is there's the metaverse, this Joe Rogan marathon of a podcast. It was 3 hours, John. I got through an hour and a half of it, but it was all about presence and the metaverse. I'm a believer that the metaverse is it's inevitable. Whether it's going to be Zuckerberg's vision of presence or not remains to be seen. This is a future that I don't want to experience because I think it's going to take us away from the real world. But to answer your question,
what is the real world? Every single human basically on the planet nowadays spends the majority of their time looking at a screen. Think about that for a moment. The majority of awake time of almost every single human now is spent looking at a screen. Phone, tablet, computer, whatever. I think if we went back in time, and this is what I try to explain to folks about the whole metaverse thing, if we went back in time and we told humans of 50, 60, 80 years ago, that's going to be your life, the majority of time you're going to spend looking into a screen, I think most people would be not so happy with that. It would sound horrible, right? You know, and here we are in this moment where people don't mind it very much at all, right? So, you know, I think we tend to freak out about these sorts of things, and then they just kind of weave themselves into our lives, and then we kind of don't want to go back to another type of thing, right? Most people, if you told them, hey, get rid of your cell phone, get rid of your computer and everything, like, you know, all the progress we made when it comes to that, and most people would be like, no way, because even some of the bad that comes with that, people still feel like the good way outweighs that, right? So, you know, and there's so many little small things that happen on a smartphone in a given day, right? Like finding a restaurant you need to go to or whatever, right? In maps, like there's so many just small things that just like are such game changers that we just totally take for granted, right?
But you don't want to experience it? Because I'm thinking you wouldn't have sat there for an hour and a half with an AR headset on. You would rather just close your eyes and listen to it versus watch their avatars. Am I right?
You're right. But then again, John, I'm old. I'm 51. If you would talk to my 17-year-old nephew, he would just be all over presence when it comes to that. And so the unique part about Meta, the investment side of this, setting aside whether or not this is a world that we want to operate in, is Zuckerberg has a strong vision about presence and the future of that as part of the metaverse. And if that future ends up becoming a reality, it's not just a 2D metaverse. If it ends up becoming presence-based, Meta's going to have a jump start, and I think that investors will come around to this. And so that's the justification for Meta.
Well, I've always felt, and I felt for years that Meta will become the biggest market cap company in the world. I feel like it's taken longer than I expected, but there's still no doubt in my mind that Meta will overtake Amazon and will overtake Apple and Google and become the biggest company in the world. I'm just very, very confident that when I look at no one has the amount of users that company has. And I look at that metaverse opportunity. I'm like, it seems like they're in a clear head start when it comes to this, and a major head start. And, I know a lot of folks in the tech industry that I've been able to, get acquainted with over the many years, just because of obviously the YouTube brand and whatnot. And, you know, I hear a lot. Let's just put it that way. But at the end of the day, based upon everything I hear, I think Meta has it over everybody right now. Doesn't mean they'll keep that. It doesn't mean they'll absolutely be a success in that space. But from everything I know personally, they have it over everybody right now. And if they get out in the front of that, this is, you know, that's the biggest opportunity we've seen ever. It's bigger than smartphones even. And that was the craziest opportunity ever. And obviously Google and Apple, you know, won that race, and look at what those companies became because they really won that game, right? Google with Android and obviously Apple with the iPhone, and that changed those companies forever. And so this next opportunity is just as big, but I think it's actually much, much bigger when you start to realize all the unlocks that's going to be there for Meta, you know. So just, you know, if they win that race, you know, you're talking about multi-trillions of dollars of market cap, you know, $5-10 trillion, like numbers that you couldn't even conceive of, which, you know, we always break through those barriers. There was a time when no one ever could think like a company could ever become $1 trillion market cap. We got several companies that are $1 trillion market caps now. We've got even a couple companies that are several $1 trillion market cap, right? And maybe even on to becoming $3 trillion, $4 trillion. And so there's going to be a day when there's going to be a $5 trillion, $10 trillion company. And, you know, you just break through those barriers over time. That's kind of what happens. So anyways, guys, much love as always. I hope you enjoyed today's video. Take advantage of opportunities out there in the market as always. And once again, if you want to get my #1 course ever on that flash sale for Labor Day, check out pinned comment down there and sign up, and we'll shoot you over the deal when that sale drops. That flash sale drops on Labor Day. It's a holy smokers, this ain't no jokers course. Let's just call it that. Much love as always, and have a great day.